So when I ask individual investors, what is the most valuable or precious commodity in the world today? Many people will say gold. Some people will say silver. Some people will say oil or some other commodity that would come to mind. I take a step back and I tell everybody, well, those are all good answers. But to me, the most precious commodity is time. And time is something that we all wish we had more of. I wish I had more of time every day. I wish we had more time to spend with our loved ones. I wish, once we used up time, I wish we could get it back. Obviously, once time goes by, you can't get it back. And as we seem to get older and older, time seems to go by quicker and quicker. So time is something that, in my opinion, is most precious. And time as it pertains to investing. And let's talk about that. And I want to show a chart of the NASDAQ because I think that will illustrate a pretty good or give us a good example what I mean by time. So last year, I would talk to individual investors. Everybody was nervous. Markets were going down. They were nervous. They said to me, Alan, I've lost money. What's going on? When will I make it back? Will I ever make it back? And I would always tell people, understand that markets go down and markets go up. And what you end up, unfortunately, losing is just time. Now, I say just, but obviously it's a very precious thing, but your money will come back. And the NASDAQ is a perfect example. You can see here at the end of 2021 how high the NASDAQ was. It came right down in 2022 and has surged in 2023. Now, again, hasn't come back to where it was at its peak, but it's getting there. So what have individual investors lost? Well, they've lost time in the market, right? If you hit a high point at the end of 2021 and you don't reach that high point again till maybe the end of 2023, you really haven't gone anywhere. So what have you lost? Well, you've lost time. And I have an illustration here, just a very simple illustration about individual investors' returns. And so let's say you were an investor in year one, you made 10% return, fantastic return, and you're at all-time highs. The next year, let's say it was 2022, last year, and you lost 10%. So basically you're back to where you started and maybe a little bit worse off than where you started. And if it's 2022, stock market, let's say the S&P was down over 20%, you only lost 10%. That's a pretty good rate of return in a market that lost double that. So you're doing half as bad or a lot better than the average market. And then let's say in year 3 and year 4, you make another 10% return in each year. Well, what do you have at the end? You're averaging a 5% rate of return over that 4 years, if you do the math, approximately. You're at all-time highs once again. You would have reached those somewhere maybe beginning of year 4. But, for those that see the glass half empty, they'll say, well, I've lost so much time. And yes, that is true. You're only up 5% when, let's say, your target was 8 to 10% rate of return. Yes, that is true. But the positive way of looking at it is 3 out of 4 years, you've made 10%. 75% of the time, you're making money. I think a great record for success. You're at all-time highs once again. So unfortunately, yes, you have lost time that it takes to invest, time in the market. But what is the alternative? The alternative is staying out of the market and perhaps making a few percent in interest and maybe taking 13, 14 years to double what you invest, or double the rate, double your portfolio size. Whereas if you average perhaps 7 to 10% rate of return, you could double your money in 7 to 10 years. So for those that I know get caught up in the losses at times and they see their portfolio falling, understand that if you own good quality, your portfolio will rise to the top again. Unfortunately, what we can't get back is time. The time that it takes when it falls and the time it takes to get back to your all-time highs again. But the positive is, one positive, before we move on, we can actually help or increase or make things better by maybe buying more of that investment when the price of that investment is down. So we dollar cost average, or we bring down your average cost so it takes less time to get back to those all-time highs. So we can do things to speed up the rebound or to speed up our investments to get it back to where they were. And that's buying more, especially if you believe that investment is good quality and eventually will rise to the top.